Hello, my name is John Reedy, and I'm the digital media specialist at Grain Journal in Decatur, Illinois. Occasionally, an article we have published on grain that touches a topic that encourages us to spend a few minutes exploring the subject a little more deeply with the author. Today, we are with Tanner Ehmke, who is the manager of CoBank Knowledge Exchange, which recently published a report outlining the challenges faced by grain elevators amid corn market volatility and crop uncertainty. CoBank's Knowledge Exchange provides market and industry research on sectors affecting the rural economy, including grains, oil seeds, biofuels, and farm supply, animal protein, dairy, specialty crops, and power, energy, and water. Tanner, thank you for joining us today.
Thanks for having me, John.
Thank you. If you wouldn't mind, set the table for us a little bit, if you will. Which regions struggle the most to get their crop in the ground during the wet spring, and how did the corn markets react out of the gate?
Well, John, planting conditions were a real struggle this year all across the Corn Belt because we had record precipitation across the entire country, but certain regions of the Corn Belt struggled more than others, and we can see that in the crop progress measured by USDA in their weekly reports. And it's the eastern Corn Belt states like Ohio, Indiana, Illinois, Wisconsin, and Michigan that are really behind. And then out in the western Corn Belt, we have the Dakotas that are also pretty behind. So, but really, we're concerned about the eastern Corn Belt because there's a lot of processing there with ethanol and livestock, and it covers such a large region. And so for the purposes of our report here, we really focused on what's going on in the eastern Corn Belt.
In the spring, your report noted the December-July carry reached as much as 32 3/4 cents per bushel, fell to 4.5 cents in June, and then rallied to 27.5 cents in August. What were the driving factors for such price swings?
Well, there's a lot of uncertainty and volatility that resulted in the marketplace because of such unprecedented late planting, and so in both the futures market and in the cash market, prices really skyrocketed because end users were trying to capture or trying to acquire old crop bushels, corn harvested from last year, in anticipation of a very small crop potentially being harvested this fall. And in the carry, that's represented by the difference in the December futures contract and the March futures contract. That carry really shrank. It fell pretty far, as you noted, and that's really how elevators make their money, is on the carry. What the futures market is going to pay them to store that crop per month. And so right away, the markets rallied in the nearby contracts. The carry contracted because the market was trying to pull bushels forward and incentivize farmers to release those old crop bushels. And then as time went on, the markets corrected again, and the carry widened back out to where it's quite a bit more profitable for elevators to store corn if they have the bushels. Now, we could continue to see this volatility play out as the growing season moves along, and as we get into the critical months of October and the last half of September, we're going to potentially see a lot more volatility there, depending upon what happens with the weather and how this corn crop turns out.
Are the federal government's small refinery ethanol waivers currently having any kind of impact on that volatility?
Well, it's having some impact in the futures market, and that will have an impact somewhat on basis and how how elevators are affected and what's going on in the cash market. But really, that's more of a long-term issue. I'd say the main thing right now that the market is trying to dial in is how big is this corn crop, and what are the effects going to be regionally. If you're a local elevator in the Eastern Corn Belt, what you're concerned about mostly is, are you going to be able to get your hands on bushels if we have a short growing season and yields are a lot smaller than what the market is anticipating. That's really on the minds of elevator managers right now, and we're not really going to have information on that until we have bushels in the bin.
Right, and the USDA, in its monthly supply and demand report in August, said the corn harvest would total 13.9 billion bushels, and based that on an average yield of 169.5 bushels per acre. That was higher than expected. But what late harvest challenges do you think could still continue to move pricing?
Well, that number that USDA came out with, 13.9 billion bushels, was a lot higher than the market had anticipated, by about 700 million bushels. Because as you noted, there's a lot of concern about late harvest challenges, specifically with frost, or even an early frost in the Dakotas or in the Eastern Corn Belt. If you look at the typical growing season or the weather patterns in those critical states of Ohio, Indiana, Illinois, southern Wisconsin, and Michigan, the average first frost, that means 32 degrees Fahrenheit, is really around that mid-October time frame. And there's a lot of this crop that may not even be ready by that point. What is really of concern is if we have an earlier than normal frost. That would even be even worse because this season has been fairly cool. We're heading into the last month or last few weeks of summer, and temperatures have been on the cooler side. And that has some concern that perhaps we may have early frosts this year, and that would have a more damaging effect on yield and total productivity.
Your report noted that elevators need to get at least 21 cents a bushel to get through the December-July carry need, but farmers may be reluctant sellers in some areas, and some areas may be corn deficient. How could regional competition for corn weaken that basis?
Well, it would be through the importing of corn from other regions. So let's say you're in the Eastern Corn Belt and you've got some real concerns about crop delays there and of a frost reducing your local yields and production. So as a result, your local cash bids are going to spike. Well, you could arbitrage that by bringing corn in from outside the region, say from, for instance, Illinois, which has a large repository of corn inventories from last year's harvest. You could arbitrage that, and that would weaken the local basis. Now, the other risk, though, is if local end users like ethanol companies start winding down their production, if they start mothballing their plants or slowing their production because of the high corn prices, or you referenced ethanol waivers earlier, for whatever reason, if we start to see local demand diminish, that would be having a weakening effect on basis. So if you're an elevator that bought basis high, you would be subject to some potentially downside risk there with corn moving into the region from outside the area, thereby weakening basis, or if local demand curtailed off, and that would weaken basis as well. So there's a couple factors there that could expose an elevator to the downside on that basis risk.
You mentioned that elevators and end users may need to get creative to price some corn loose from reluctant farmers. What options might a local elevator have under these conditions to be creative?
Well, they might have to offer some different marketing plans. Delayed pricing is a common approach, and what that means is the farmer can bring their grain in to the elevator, and they just use the elevator's storage at low cost or for free even, and then price that corn later. Now, the downside to that is that because of free storage, the farmer might be incentivized to take advantage of that for a longer period of time, and therefore the elevator would have more of their storage tied up longer than they would like. So there's some options there, or they could just bid up for the corn a lot higher, just raise their local cash bids, tighten that basis up. But there again, we just discussed if they're going to be bidding up local corn prices and tightening their local basis, they would be subjecting themselves to downside basis risk.
And I just wanted to ask you what your final thoughts and what you think the biggest challenges for elevators in the upcoming marketing year might be. Has this year seemed more challenging than recent years? Have you experienced a year like this one in the past that required a lot more creative thinking on the part of elevators?
Well, elevators all across the country are going to always be challenged with unique market variables with their end users and where they're getting their corn from, and the very global dynamic nature of markets. But as for this growing season, we have never seen anything like this ever on record. This was the latest the latest crop that was planted. Only not even half the crop was planted on time around June, and so a lot of acres came in very, very late, and we just have never seen anything like this ever on record. And so to say, is there a baseline year like we've seen like this one? Not even close, not even close. And so that's the reason for this volatility that we're seeing and the headaches that a lot of farmers, elevators, and end users are dealing with.
Sure. And as you mentioned, there could be all the predictions in the world about yield, and the frost could come early, and that could change everything in a moment's notice and toss everything upside down again, couldn't it?
Oh, absolutely. And a lot of elevators are trying to brace for what could happen, and the risk is if they try to bring in those bushels by bidding higher for them and buying basis really high, then they expose themselves to that downside risk. But market volatility is nothing new in this industry, so I think there's a lot of elevator managers out there that for them this is probably old hat in that regard, just dealing with volatile markets in general. That's what we do in agriculture.
I guess staying even-handed and being cool in all these situations is always the best course for these guys. And as you mentioned, they've had a lot of experience with it. Thank you very much for sharing your insights with us today, Tanner. I appreciate it. If you're interested in more information and want to read this full report, it's at CoBank.com. That's CoBank.com. Again, thank you very much, Tanner, and have a nice day.
You too. Thanks a lot, John.